Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Ports. Welcome to episode 28. I'm going to be talking about the dollar. Again, I'll be talking about the dollar. So, what is normally expected here is that since we had our this is the weekly time frame. Let's go on the daily. So, since we got that 50% rejection and we came back to the 23.6. How I love entering the market. uh Normally, without the the macroeconomics is telling me that the United States dollar will continue to go bullish, but then it's not September yet. We are about 5 days away. uh we'll see what happens in September, but for now the US dollar is telling me that we're about to get that continuation up there. So what will normally happen is that since the Canadian dollar is telling me that macroeconomically it will move sideways. Now, in terms of moving sideways, we need to look at where the Canadian dollar is. The Canadian dollar is actually oversold. It's oversold. It's at the bottom of the market. Let me show you why I am saying oversold. It's oversold just like what you see with the US dollar. So it was up here, it went all the way down there, which means it is oversold. So they're telling us that the Canadian dollar will move sideways, and the only way that okay, the nature of the market is that when the market is oversold, we expect it to pull back, even though we do not have any bullish reasons to buy the currency. We expect it to pull back. Now, even if it does not pull back macroeconomically, it says it will be going sideways. So in this sideways move, we're expecting a tiny pullback in that sideways move. It does not need to go all the way up there, but it has to be a pullback first. Let me show you what I'm trying to say. We need to have a pullback that is at least up there, and the sideways move that will be like down here. So these are the expectations on the CAD, and the US dollar is telling us that it will be bullish. So if the US dollar is going to be bullish, what we're trying to achieve here is an economic divergence. If the US dollar is bullish for good, then what will happen is that the whole currency will be moving upwards, because this guy does not want to move upwards. He's either moving sideways or giving us a tiny pullback. Now, from this tiny pullback might delay our trade, but at the end of the day, the currency is oversold and it does not have any strength of moving higher, which means this guy will have to take over, which is the US dollar. So if the US dollar is taking over, then it means the upward trade will take over. The whole currency, that is USD CAD, will be bullish. Now, that is the macroeconomic part of what we're talking about. But in terms of in terms of price action, we know that we had our first touch here, our second touch here, the manipulation that I always look into. So after this market manipulation, we expect the market to expand, just like how I showed you the nature of what Wyckoff schematics. But you need to be able to see Wyckoff schematics even when it's inverted, even when it's moving in an uptrend correction like that. It's just the same thing. It's just the same whack off. So this becomes the spring. The spring is here. This becomes the spring, and somewhere you will get the test somewhere inside here, just like what we are seeing here. So this, let's say this was the spring and the market came back into uh, the compression area and it tested this level, just like here you can say it came in, it tested, or it came in and it tested here and it moved higher. Now, in terms of macroeconomics, what we are expecting is that somewhere in that uptrend, the US dollar will give up. Now, when it gives up, what will happen is that it won't be able to go all the way up there, because in September, macroeconomics is telling us the currency will buy. But at the moment, macroeconomics is telling us in September the currency will be bearish. The US dollar will be bearish. And the CAD, if that happens, this market will move up a little bit and it will give up somewhere, which will give the CAD that was supposed to be moving sideways or giving us a pullback higher. That means this whole thing will move downwards. So that's the macroeconomic part. So the CAD is not bullish, it's just moving sideways. So it does not have enough strength to move up there. The only uptrend that you will get on the CAD is a sideways move, or the market might be correcting. It might be correcting from an oversold area. Oversold meaning it's down here, it was up there, now it's down here. It has to correct at least 50% of what it has and continue to move sideways. But at this point, it does not have enough, the cat does not have enough strength to go bullish. So that's the macroeconomic part of it. But here I'm expecting the US dollar to give us this uptrend that we're looking at, and somewhere somehow I'm expecting it to give up. Now, where do I expect it to give up? It might be with this order block here, the last bullish candle before the drop. It might give up somewhere here and drop, because we're 5 days away from September. And when it decides to go bearish, we're gonna have a currency that is continuing to move downwards. But in terms of price action, those who trade price action, they saw the first touch, the second touch, the third touch, and the market going bullish, which is an expansion out of here. But we are having the pricing in of sanctions, and the pricing in of sanctions is in alignment with the macroeconomic horizon of the US dollar. So that's part of the reason why what we I don't believe in the US dollar getting stronger. And this is another reason where the euro is actually bearish by correlation with the Danish kroner. And what makes me believe that it will, okay, macroeconomically the euro is bullish macroeconomically. But because they need to report to Denmark, the euro is telling me that it will be bearish, meaning that's part of the reason why I'm expecting that this is the first touch, second touch, and I'm expecting a manipulation which might bring me out of this area, where we might get, a bit higher. Even if it goes above this level, I would be very much satisfied with it, because the market makers don't have enough money to pay for a downtrend this huge. So what they need to do is to break higher and entice those price action traders, make them think that, hey, the market is actually bullish, and when they start buying, the market collapses. But this whole game is about knowing what macroeconomics is saying. And a lot of price action traders, they trade based on uh, price action. So that's how they trade. So in terms of Euro USD, I told you that somewhere down the line, the okay, we are 5 days away from the US dollar giving up on the current uptrend. I told you that I said the US dollar is repositioning for a sell. You see here you see some kind of a bullish trend, but this bullish trend is not bullish. It's just the US dollar is oversold at the moment. It's just repositioning for a sell. So if macroeconomics is telling us the US dollar will continue being bearish, at this point the US dollar is oversold. We expect it to at least give us a pullback. The expectation is that it has to turn around somewhere at this order block here. It has to turn around somewhere here or here. It doesn't matter. I would be satisfied if it turns around here, but it's better to expect it to turn around here and continue downwards. So that's the macroeconomic perspective of what we have. So it's a macroeconomic projection, and of course we do have the sanctions that the sanctions and the sanctions as well as the why am I forgetting it, the tariffs that are not being resolved, and the Ukraine Russia war, they're still not getting a solution for ending the war. And the US dollar is very volatile. If it happens overnight, that even when we don't have any macroeconomic reasons for the currency to go bullish, but if it happens overnight that uh, the president of Russia and the president of Ukraine, if they tell us overnight that they found a solution, they're ending the war, the US dollar will spike actually. So it will spike without any reasons. I saw the last time one uh, president, the president of US was Trump. The last time I saw that, I've seen the US dollar pumping higher without any reasons. It was just moving higher and higher. And when it collapses overnight. So a lot of people will lose money because of this current president called Donald Trump. Some people enjoy uh, some people enjoy working with Donald Trump, but I'm not a volatile trader, so I trade the market over time. My sells take time to be priced in, and my buys they also take time in being priced in. So I'm not a kind of a person who says, in fact, if you look at this is 2021 July, May 2021, all the way up here, it tells you that this is 1 year. This is 2022. So, in terms of macroeconomics, my job is to look at the nature or the place that which the dollar is at and my expectations, because I trade a system called hedge inflation. My intention will be hedging the inflation of the US dollar against the inflation of another currency. So at the moment, the trade that is giving us economic divergence is actually the trade that is giving us a beautiful economic divergence is the USD JPY. This is the reason why I say USD JPY. I'm saying in case the war is resolved, I will be looking to buy the USD JPY. However, at the moment, we don't have any reasons to buy the US dollar unless if uh, something huge happens like the ending of a war. We call them ad hoc events, unexpected events, but at the moment we are selling the dollar. So goodbye, guys. I will see you on the next episode. Goodbye, guys.